Hello and welcome to this video. In this video we've got something a little bit different. See, here on Boffix Tax Tips we're normally talking about how companies can save tax and how businesses can save tax. But today we're looking at the individual. So you, me, everyone else listening to this, how can we save some tax? Well, stay tuned. I've got some great little tips to make sure that you are only paying the right amount of tax. Hello, my name is Aaron Patrick. I'm a chartered accountant, a certified UK trainer from QuickBooks, that QuickBooks chap on the internet, and also head of accounts here at Boffix. Now, one of the things we want to make sure is we always pay the right amount of tax. There's nothing worse than finding out later down the line you could have been more tax efficient, or even worse, you find you've got this massive tax bill you wasn't even aware of. So follow these tips and tricks to make sure that you're only paying the right amount of tax. Let's go straight into tip number one. First thing to do is, if you're employed and you're getting a pay slip every single month, please check that tax code. Now, HMRC will issue a document that's going to tell you exactly what that tax code relates to. And I know it can be a bit complicated, and we'll make sure on this channel we have a video dedicated to how to read your tax code. But please do make sure that you keep an eye on it, because the tax code itself is designed to determine exactly how much tax you have to pay. So if that tax code is wrong, then you're overall going to be paying the wrong amount of tax. So please make note of it. Now, HMRC will, over time, correct any issues, but it does mean that at that point in time, you will be paying the wrong amount of tax. So if you can get that tax code right first time, you're going to be absolutely spot on. Another huge tip is consider if you should do self-assessment. Now, if you only have employed income, chances are you don't have any requirement to do self-assessment. But if you've been issued a tax code that you don't understand or don't recognise, or there's certain aspects to it that just don't make sense to you, then sometimes doing a self-assessment can be a quick and easy way to make sure HMRC hasn't had a wobble and aren't actually putting the wrong amount against you personally. See, the idea of a self-assessment is you take control of all of that income you've had in a particular year, you put all of it on the self-assessment, and it's then going to tell you how much tax you should have paid. Therefore, you put against what tax you have paid and see if you've got under or over, see if that tax code was actually worthwhile or not. But please do keep an eye on tax codes. Tax codes can be the quickest and easiest way to make sure you're paying the right amount of tax. Another tip I would say is think about claiming job expenses. We've all had to work from home lately due to the pandemic, so make sure that those sort of expenses are included in your tax return. Now, you don't necessarily need to complete a tax return for that. HMRC do give you the opportunity as an employed individual to actually file for an expense claim. And that might be the easiest way for you to get your expenses in. But they do mount up. So use of home, as I said, is a really good one. Another common one is your mileage. If your employer is only paying, say, 20p of it, or 10p for your mileage, or something lower than the normal 45 to 25p, then you may have grounds there to get some expenses brought in. Overall, you just want to be making sure that whatever expenses are allowable to you, you have got made sure those claims. They're not being given automatically. You have to physically claim them, and also you have to claim them on a year-by-year basis. So, have a think about it. Any costs that you have, any professional costs, any costs related to actually keeping your uniform in check, those sort of costs. Best place to do is have a look at HMRC's website, put in work costs, and then you'll see if there's anything eligible for you. Another really good tip is to think about pension contributions, because pension contributions are ultimately a way in which you can actually be allocated money that's owed to you and reduce your current tax year while trying to prevent or prepare for the future. Now, pensions are an easy way of you being able to make sure that your tax bill is nice and low, because HMRC actually gives you an incentive to put into that pension scheme. They'll also help top it up. So it's an easy way for you to be able to make sure that you're paying a reduced amount of taxes based on how much pension contribution you've put in there. Next tip, making sure you maximise that personal allowance. Now, if you have an employed income over £12,500, which is the current personal allowance rate, then there's not much you can do about it. But if for whatever reason you're below that figure, then start trying to think about how you can utilise that. Maybe for next year, maybe for the year after, maybe to help your partner, whatever it's going to be. But if your income at this point in time is below £12,500, then basically you're leaving tax-free income on the table. Now, depending on what your partner does, depending on what your friends do, whatever it's going to be, you may have an opportunity to be able to take some of their income, take some of their business profits, anything like that, to be able to utilize that personal allowance. Or think about a side hustle. Now, or that time when you've got that ability to earn up to £12,500 completely tax-free, that might be the perfect time for you to start thinking about looking into a side hustle. If you're actually earning a side hustle at this point in time and it's below £1,000 of income, now you have to be very, very precise here, this is income, not profit, then you won't have any requirement to declare that on a personal tax return. Now, I'd highly recommend you at least tell HMRC that you've got this income. You at least prepare yourself to do a tax return. But at the end of the year, if it's below £1,000, then there's no requirement to declare that on the tax return. Again, a nice little bit of tax-free money there for you. Either way, look at ways in which you can utilise that £12,500. Because at the end of the day, that's tax-free income you want to make the most of. Speaking of your £12,500, what about if you're married or in a civil partnership? Well, that is give you the opportunity to actually transfer some of that allowance from one person to the other. Again, if one of you is earning lower than that £12,500 and then one of you is earning above that £12,500, then transferring some of that allowance from one person to the other makes sense because you're increasing the amount of tax-free allowance that one person can have while reducing the other who's not going to be using it anyway. So think about that marriage allowance. That can be a nice easy win for you. Investments and savings. Don't forget about the ISA. Now with the ISA, the whole idea is again, HMRC is incentivizing you from putting money away. They give you £20,000 currently of an allowance where you can stick into an account, and it doesn't matter how much it grows by, how much interest you make, then none of that will be taxed upon. Meaning that each and every year you can put £20,000 into an ISA, and doesn't matter again how much it grows, you won't have to worry about any of the taxes available on it. So make the most of these allowances. If you're going to be saving anyway, then make sure to use an ISA so that you don't have to pay any taxes on any interest that you earn. And speaking of savings, what about your dividend allowance? Now, everyone in the UK currently gets £2,000 of tax-free dividend allowance. That means you can receive up to £2,000 of dividends without having to pay a single penny on it. Also, if you're in that lower rate of band, then dividend payment or dividend received only incurs 7.5% of tax, which is one of the lowest rates of tax available. So dividends can be a huge tax saving for you. Now, if you have your own business, it does make sense that you utilise that and you pay yourself as a dividend as opposed to salary, for example. But also you can think about the stock market and looking for businesses who actually pay dividends as a way of remuneration. Either way, you get £2,000 completely tax-free for dividends. So I would recommend each and every year utilising that £2,000 allowance. And then one of those other allowances people forget about is capital gains. Roughly around £12,000 per year. Again, completely depends on what tax year you're in. But as we stand at the moment, just over £12,000. Now, what is capital gains? Well, it's when you buy and sell an asset. Most of the time this relates to property, stocks, cryptocurrency, those sort of things. And if you can earn up to £12,000 without having to pay any taxes on it, then again, that could be a really useful idea. And one of the best things you can do when it comes to tax planning is splitting them into multiple years. So for example, if I had some stocks and shares to sell and it was going to yield me £24,000 of profit, then it really does make sense for me to split that from 1 year to the next, reducing my tax bill all the way down to zero. Whereas if I had sold it all in the first year, that would potentially give me a tax bill on that £12,000. So do think about using your years and your allowances to the best of your ability. And try planning ahead, try thinking about when to sell particular assets, when to sell particular elements, so that you can utilise all the allowances available. And that's when you really do start saving some good amount of money. Now that's not the only amount of tips and tricks that we have, but those are the ones that we're going to give you with you today. Now let me know below, is there more that you want me to go through? I'm more than happy to do a round 2 of this video and we can talk about all those other lovely tips and tricks that we have. Ultimately, this video is all about you though. This is about making sure that you're not paying too much tax. So go through the ones I've just gone with, see if any of them apply to you and see if you can start saving some tax. And let us know below, how much tax was you able to save using these simple and easy options? Don't forget to like and subscribe to this video. The more you like it, the more eyes that it gets to, the more people who get to save taxes. And the more you subscribe, the more tips we're going to get you that ultimately means you're going to save the most amount of tax. My name's been Patrick. It's been a pleasure to do this video for you. Hopefully we save you a nice amount of taxes. And I'll see you in the next video. Bye for now.